Hi, this is Kirubakaran Rajendran. Welcome to another video series with Groww. In today's video, we are going to talk about Bank Nifty expiry trading system. So this is going to be a rule-based approach where I'm going to clearly explain what are the rules that you need to follow, which you can trade it on expiry days to make a decent profit. So basically, with respect to creating a trading strategy for expiry days and for non-expiry days, totally needed to have a different approach. So because if you closely observe in the recent past, wherever whatever the kind of trading strategies that you follow, basically market moves in both the sides. On the upside, morning it will move on the upside, and evening it will move on the downside. It's going to hit the stop loss on both call and put, and most of the people are in loss. So because of these zigzag move that happens in the market, because as long as market moves in one-sided direction, any kind of option selling system can easily make money because it becomes a direction system. But in order to make money on expiry days, it's better to focus on non-directional systems than directional systems. So what is non-directional system? See, non-directional system versus directional system is nothing but if market moves in one-sided direction, if you're able to make money, then that is what directional system is. And if market doesn't move in one-sided direction, if it is moving in a very tight, narrow range without on the upside movement or without any downside movement, and if you are able to make money through in such kind of days, then that is what non-directional system is. So that is what we are going to discuss in today's video. So we are going to explain about a non-directional option selling strategy, and by implementing this on expiry days, I'm going to tell you how this has performed in the last 5 years and how it has been performing in the recent past as well. So in order to create an expiry trading system, we need to observe how the market has behaved on expiry days. So for that, I need to calculate all these values like day open, day high, day low, day close. I've taken all these values and I've checked how Bank Nifty has moved during expiry days. So from the market open till market closed, so from that time till market close time, how much percentage the Bank Nifty has moved up, how much percentage the Bank Nifty has moved down, and finally where it closed. So I have observed all this data. I could see after exploring all this data analysis, I am able to finalize that most of the time on expiry days, Bank Nifty has not moved up more than 1% on the upside and not moved up more than 1% on the downside, which means that from the day open, it has not moved more than 1% on the upside most of the times. And similarly, on the downside, it has not moved more than minus 1% on the downside. So this gives me a concrete evidence that okay, Bank Nifty can stay in a very tight range on expiry days between minus 1% to plus 1%. So after doing the data analysis, I'm able to conclude that okay, Bank Nifty stays in a range bound movement most of the times on expiry days. So now I all need to do is I need to create a short straddle system, and instead of using a fixed stop loss like 30% or 40%, I'm not going to use any kind of fixed stop loss, because if I use a fixed stop loss, the stop loss is going to hit because of whipsaws movement. It can hit the stop loss of call side, it can hit the stop loss of put side. So instead of using a stop loss on the premium basis, I'm going to use a stop loss on underlying basis when Bank Nifty moves certain level. So basically, when you're creating a short straddle system, it gives you an undefined loss if market moves in one-sided direction. And if you're using a fixed stop losses, market could give you losses if market moves in a zigzag mode. So we need to find an optimal stop loss level. So for that, instead of using a stop loss level on the premium basis, we are going to use the stop loss level on index basis. So only when the Bank Nifty moves beyond this level, we are going to close all the positions and exit out of it. And if the Bank Nifty doesn't cross this specific level, then we are going to hold the position, and that is going to give profit. So let us see what is the rules of the strategies. So the rules of the strategy is straightforward, very simple. So the instrument that we are going to choose is Bank Nifty spot. So first find out what is the Bank Nifty spot value at 9:30 a.m. So once you find out what is the Bank Nifty spot value at 9:30 a.m., note down the value. Say suppose for an example, I have considered okay, at 9:30 Bank Nifty is at 40,000. So in this case, what we are going to do is we are going to short 40,000 CE, and then we are going to short 40,000 P. So both call and put, both at the money call option and at the money put option, we will short it. So now we are going to use a stop loss on the underlying, which is on the spot, so which is 1%. So if Bank Nifty moves up 1% from 930 value, so 1% of 40,000 is 400 levels. So if Bank Nifty moves up to 40,400 levels, we will close both the position 40,000 CE and 40,000 PE at whatever that price, and we will exit at a loss. Similarly, if Bank Nifty moves down minus 1%, which is from 40,000 level, If it goes down 400 points below, which is if it goes below 39,600 level, then we will close this short straddle 40,000 CE and 40,000 PE at a loss. If Bank Nifty neither moved up 1% nor moved down minus 1%, if it trades between this level, between 39,600 to 40,400, then whatever the CE and PE which we shorted will end up in profits. Then we will make a very good profit, which we will exit at 3:20 in the evening. So this is the rules of the strategy. So if we apply these rules on all days instead of only on expiry days, then this is the overall profit, where you end up making almost 3.5 lakhs of overall profits for the last 6 years from 2017 to till date. And this is the average profit per day, which is 200 rupees, and max profit is around 10,000 and max loss is around 6,000, and it has a winning accuracy of around 59%, and maximum drawdown is around 44,000, and this is for now only one lot, which you short one on call option and one on put option, and the maximum drawdown days is much higher, which is almost 438 days. So if you trade this specific strategy on all days, this is not reasonably good, because market is not going to be in range bound on all days. So you tend to lose more if you trade on all days. So this is the overall stats on a day wise: Monday, Tuesday, Wednesday, Thursday, Friday, and at the bottom you could be able to see the total. So on each days you are able to see what is the overall returns. So on Monday it is mostly negative, and on Friday it is mostly negative, because on these 2 days market tends to be in a very big trending move. Because when Monday market opens, it opens with huge multiple news factors that has happened across the globe. So mostly it will be gap up or gap down, and there will be a big trend following that will happen. On Friday, since there is an uncertainty that is going to happen during on weekends, most of the people will try to close the positions, and that can give a big rally on the downside in the markets, due to which Monday and Friday is not profitable with this specific system, since both the days can be trending. So our system rules works well only on range bound days. So Tuesday, Wednesday and Thursday, if you observe, Tuesdays and Wednesdays it is given 43% overall returns for the last from 2017 to 2023, and on Thursdays only it has given almost 118% returns. So from Monday to Friday, if we consider, most of the profit is coming only from Thursday. So which is clearly evident that this specific strategy works really well on expiry days compared to all other days, because on expiry days market tends to be in a very range bound move most of the time. So that greatly helps our strategy. So this is the overall stats if we apply the rules of the strategy only on expiry days, which is only on Thursday for Bank Nifty, where you need 1.7 lakhs of approximate margin, and overall profit it has given us almost 1.9 lakhs, almost 2 lakhs of overall profits after all slippages of 0.5%. And the average profit per expiry is almost 600 rupees, and maximum profit is same, which is around 10,000, and maximum loss is around minus 6,000, and winning accuracy is almost 55%. And the good part is the maximum drawdown is only 27,000 rupees. So it's very, very less compared to trading on all days. So this is the yearly stats. If we apply this rules of the strategy on every Thursday from 2017 to 2023, this is the overall ROI we might get. So first year we got 15%, another year 2018 11%, 2019 15%, 2020 29%, 2022 we got 36%, and 2022 was flat, and 2023 so far it has given 9%. So if you're an option seller, you definitely know that very well. In the recent past, it is really difficult to make money on expiry days, because market is totally erratic, which it suddenly moves up 100 points, suddenly moves down 100 points, hitting stop loss on both the sides. By using stop loss on underlying as per this strategy, in this whole year, that too from February to till date, it has given very good returns consistently on expiry days. So if you are looking for an alternate strategy to trade on expiry days, then definitely this strategy should be really helpful for you. So let me give you the recap of the rules of the strategy so that you can clearly understand. So as per the rules of the strategy, you are going to check what is the Bank Nifty spot value at 9:30 a.m. And if the spot value is, for an example, if it is at 40,000, then we are going to short at the money call option, 40,000 call option and 40,000 put option, which is going to be on weekly option, not on monthly option. And then instead of using a stop loss on the premium basis, you are using a stop loss on underlying. So you have to wait for the Bank Nifty to move more than 1% on the upside or more than minus 1% on the downside. Then we'll close both the call option and put option. That's all. If it doesn't move, if Bank Nifty keeps very tight range, and if it moves between these levels, so from 40,000, if it does not go down below 39,600, or if it did not go above 40,400, then both our call option and put option will decay. So we end up making profits on expiry days. So if these levels are crossed, you are going to exit both the legs. If these levels are not crossed, you are going to exit the position by 320. So this is the rules of the strategy. So I hope you learned a new trading strategy today, specifically with respect to option selling on Bank Nifty with respect to expiry days. And if you guys have any questions with respect to trading strategies, whichever we discussed today, please post in the comment section. Definitely I'll address it. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.